The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
Thursday, November the 18th, European stocks fade. We're being led lower by commodity stocks. Oil stocks are lower, mining stocks are lower. Got the banks down as well. There's 30 minutes to go. The countdown to the close starts right now.
The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
So European stocks are fading into the close. That's the narrative we're watching right now. We are seeing the mining stocks coming down a little bit. Some of the oil stocks are also fading on the back of the move that we were hearing about from Anne-Marie Hordern that is being driven by the Chinese. The FTSE 100 is down by 0.6%. On the continent, we're looking a little bit better, but it's definitely feeling a little bit more risk off right now. As I say, the banks are drifting a little bit lower as well. That's adding some heavyweight downside to these markets. But it is worth remembering, as ever, that we are near record highs, Alex.
It's such a good point. Here in the U.S., I got some winners and some stark losers for you as well. To pick up on your point about energy, that is the worst performing sector in the S&P, down by about 9 percentage points. But it's also metals and materials. Metals are really rolling over as well. So just watch that commodity space in general. Well, of course, I would say that. On the upside, you have consumer discretionary up by 1%. Macy's crushed it. Kohl's crushed it. Victoria's Secret crushed it. Bed Bath crushed it. Who knew at the end of the day? Individual stocks, Cisco, worst performing stock on the S&P. Their outlook fell short. It was a rare miss. It's falling the most since August 2020. Upside, Nvidia, super solid. At one point hit a record. One analyst says we could see a $1 trillion market cap here. This is most definitely the chip story. Winners, losers. Guy?
Well, let's talk about what is happening in terms of one of the big drivers here in Europe. European countries starting to make significant U-turns as they face a brutal fourth wave of the pandemic. Workers are looking to return to working from home. Bill Gates, the founder of Microsoft, spoke with Bloomberg editor-in-chief John Micklethwait at the Bloomberg New Economy Forum. They spoke about what is happening with COVID and the strategies that are going to be required to deal with this next phase of the pandemic.
The idea that economic activity will resume in full once you get to flu levels, it's very likely. Now, you'll have some hot spots where you'll still have to have non-pharmaceutical interventions or, huge incentives for people to get protected. Any country that was able to do what China did and stop it early before it exponentiated up, where you had case rates, above 2% of population, that's a huge blessing that they were able to do that. That means they have very little natural immunity, and so they have to drive their vaccination coverage up dramatically before they drop sort of that wall that's allowed them to exclude infection from coming in.
That was Bill Gates, Microsoft co-founder, speaking with Bloomberg editor-in-chief John Micklethwait. That's at the Bloomberg New Economy Forum. Let's go deeper into the virus right now and the latest surge. Sam Fazeli, director of research for EMEA for Bloomberg Intelligence. He joins us now. Sam, something that Guy and I have talked about a lot has been record high equity prices in Europe, yet also rising case count, particularly in Germany, over in Europe as well. Is the rising case count, why is the market ignoring it? What's within the numbers that should leave us feeling better?
Yeah, well, hi, Alex, and thanks for having me back. Well, we've seen that there's been so much progress in terms of antiviral pills, in terms of the third shots, booster shots, whatever you want to call them, of vaccines. So I think the investors are probably, and rightly so to a degree, hoping and believing that these measures will be implemented correctly by the various governments, and that it will lead to a control and a dampening, and that hopefully this is a fire that can be put out across Europe. I don't think that's misplaced, but that requires a lot of the governments to really make the right politics to make sure that that happens, and also put the systems in place.
What do governments need to do now to get in control of the situation, Sam?
Yeah. You know, my favorite thing has been always talking about masking. It is the cheapest, the easiest, the simplest way of reducing the risk of transmission. Keep people going back to offices, etc., but please ask them to wear masks and guide them a little bit so that people don't wear what looks like just basic thin tissue over their face, thinking they're covered. If we do that, it's a lot less about protecting me, but if I am infected, I will have a lower risk of infecting somebody else.
How are vaccination rates going? I mean, here in the U.S., we're talking booster rates now. We're not talking vaccination rates anymore. It's a different story in Europe.
Yeah, but also, I have to say, Alex, I think that's really wrong in the U.S. because if you've still got 40%, 20%, 30%, depending on what state you're in, of your population never vaccinated, not even had their primary series, that's bad news. And if you look across Europe, I think you find that the countries with the lower than 70%, 75%, 80% coverage are suffering a little bit more in terms of infection rates. So that's what we're seeing across Europe. But every country seems to be going up. Italy may be just slowly coming up.
Sam, we're going to leave it there. Great update. Thank you very much indeed. Bloomberg's Sam Fazeli joining us from Bloomberg Intelligence. Let's bring in now into the conversation Mark HAEFELE of UBS Global Wealth Management. Mark, we thought we might have put this behind us. It doesn't look like we are. The European growth story may be at risk here. What do you make of the rise of infections that we're starting to see? Do you think investors should be concerned?
Well, we don't think it's the primary concern at the moment. What we are seeing, of course, along with this is not necessarily the spike in hospitalizations yet. And I think that's what we have to be focused on now that we're in a world of breakthrough infections, you know, for governments to really take significant action to slow the recovery growth that we see. That would be the metric that we would be focused on.
Hey, Mark, it's great to see you. It's been quite a long time. You guys came out with your 2022 target, or your outlook for this year today. And I just wanted to sort of tie in your bull case, and that's the S&P hitting 5,200. And I'm curious, what's your base case for COVID if we hit that level?
Well, we see that in the base case, we see COVID tapering off as a problem based on not just the infection rates falling with the boosters and the vaccination rates rising, but that the hospitalization rate, which is our new focus, remains low and continues to go lower. So that's part of our base case.
Janet Yellen said the other day that if we beat the pandemic, we'll beat inflation. Are we going to beat inflation if, as you say, the scenario unfolds that we can get control of this virus and actually this fourth wave may end up being effectively an exit wave?
Yeah, I think that was a really important statement for a couple of reasons. First of all, when we look at this inflation, certainly a lot of it is in that supply and demand imbalance, right? So, you know, as you've had some people on talking about this, parts of the world open up and they want to buy, they want to spend, while other parts, you know, have, like, for example, the third largest port in China can be closed, and that contributed to these supply demand imbalances. And so, and we think that is the largest component of this inflationary spike that we're seeing. So I think from that perspective, that's a very important point. But the other important point is that, you know, that story around that inflation is temporary, coming from Treasury, coming from the Fed, likely means that you know, the Fed will be very circumspect before they take actions to perhaps over tighten. And I also think you have to factor that in, you know, the policy response into what we're seeing in the data.
All right, Mark, hang tight with us. I'm Mark HAEFELE of UBS Global Wealth Management. You'll be sticking with us. We're going to get more on that 2022 outlook next. This is Bloomberg.
"18 minutes to the European close." I want to talk a little bit about what is happening in different asset classes and the impact that volatility is having from one to the other. Then I want to talk a little bit about what that means for your portfolio. So what we've seen is a lot of volatility in the fixed income channel. That's now starting to bleed into the FX channel. What we've seen over the last few days is a significantly strengthening dollar. The euro's down through 113 against the dollar. The euro's also weakening up against the Swiss franc. I think we're at a 6-year high on that one. So we're getting back into some interesting spaces here. And that's going to have a meaningful impact in terms of the portfolios that everybody's trying to manage on either side of the Atlantic. There has been this idea that you push out of the United States into Europe and vice versa. But I'm going to kind of lean in on that because the FX story is starting to get exciting. And it's going to have a material impact. And my piece of evidence for this is off the WEI screen on my Bloomberg. And it's right at the end here. And it's basically year-to-date performances and year-to-date performances currently adjusted. And what you've got here is the S&P, 24.74% year-to-date. That's the gain that you are getting if you're a dollar investor. If you're a euro investor, you've made 34%. So a nearly 10-point gain vis-a-vis what you would have made if you were a dollar investor. So that is a huge factor in terms of thinking when you have to currency adjust your portfolio. It works for Europeans into the US. It works against the US investors into Europe. So let's think about this in the context of the year ahead. As Alex has already indicated, UBS Wealth Management out with theirs. Mark HAEFELE obviously writing around all of that. Mark, what do you make of the story when it comes to currency adjustment? What should we be thinking about here when we think about currencies and the impact it's going to have on our equity market performance?
Well, look, we think that the dollar can strengthen next year versus European currencies, versus the Swiss franc, because you've got the chance that the Fed is going to be tightening at the margin, or perhaps even later if the economy is strong, seeing rate hikes, whereas we just don't see these rate hikes taking hold really in Europe next year, or in Switzerland or in Japan. But also for the pound, we think it could lead to some pound appreciation because the Bank of England is on the more hawkish side. So I think the driver on the currency side, you want to first look at what's going on in the relative central bank action. And then, of course, how that relates to equities, well, we would say go where the growth is. And we do think that the European recovery can continue here. European equities have not had quite the strength as some of the other regions, and it's a very cyclical region. So we think it'll benefit as this global growth continues into the first half of the year.
So, Mark, if I'm a U.S. investor, how do I buy European equities? What's the best way and the best hedge?
Well, look, first there's lots of ways to buy European equities, but so regionally. But we're also thinking about this in sectors, and so global financials would be another sector that we would look to play this, and also in the energy sector or the commodity equity space, because there again, it's another way to play this kind of global growth. Now, in terms of hedges, I'm not saying that it's a direct hedge, but as we look out further into the year and we see that growth normalizing, one of the sectors that we're looking at is healthcare, because healthcare has both some attractive valuations and some defensive characteristics on the pharma side, but it also has that kind of disruptive technology component when you look at things like gene therapies.
If you're a European investor and the dollar's going to go stronger, and you guys think the dollar's going to get stronger, then the outlook for investing in the United States looks pretty solid. You've got some pretty good performance coming through. We are maybe going to see Europe outperforming, but nevertheless, once you put the currency overlay on top of that, you're going to get a nice pop. What should European investors do? Should they stick their money at home, or are they going to get a better bang for their buck? I excuse the use of that over in the United States.
Well, right now, I think that particularly earlier in the year, we think there's more bang for the buck in European equities and Japanese equities than playing it, even with the currency component involved. So for right now, this growth is just so strong. I think that and the inflation is high. We don't see it as a threat, but to the extent that it plays to the upside, I think that focusing on the equities that are in the growth sector and more resilient to inflation is the number one idea that we have right now.
What about the back half? You do see a turn in the middle of the year.
Yeah, I think so. As mentioned, healthcare being a preferred place to look for the back half of the year. But then also, is it time to build up some strategic or more strategic holdings in areas like emerging markets or China, where, we just haven't had the same moves that we've had this year. So we do see some signs that China's growth slowdown, will be bottoming out, and that a lot of the noise around regulatory changes are getting into stocks. But I think that's an area where we're going to be looking to try and move capital as we get into the back half of the year.
Mark, how do you think about where we are now? We've been debating this all week. David Solomon at Goldman Sachs thinks that greed is outpacing fear right now. A lot of people are concerned about valuations. You see the EV stocks taking off, these hyper-growth stocks. We were talking to Anastasia Amoroso about this, the Rivians of this world, now worth more than Volkswagen. What does that tell you?
Well, look, there's certainly a lot of capital sloshing around in these markets at a time when, longer-term growth projections are would be normalizing. And so there are still people who are willing to pay up for growth. We would suggest that the places that you want to look for that are indeed the areas like clean energy, energy alternatives, where both China and the United States, and as 55% of the world's largest carbon producers are now on track to kind of cut emissions by 2050. There's a lot of regulatory policy support in these areas. So I think it's a mix of large amounts of capital flows, but also this positioning for where the growth is going to be exceptional over, say, the decade ahead. And that's one of the things that we cover. But I also just want to come back to valuations. We really saw this third quarter earnings as a test. And keep in mind, the earnings beat expectations, which are already elevated. The margins remain strong, and companies did not guide down materially in most sectors, really, around anything around this supply chain or the labor issues. And therefore, the valuations are not that stretched compared to where they have been, given that earnings growth.
Mark, always a pleasure. Great to get you on the show. Thank you very much indeed for your time. Mark HAEFELE, UBS Global Wealth Management CIO. What are we going to be talking about next? The Turkish lira very much in free fall. Another rate cut today. We've seen another 100 basis points. What comes next? Well, the hints are maybe that we're coming to the end of this cutting cycle. But nevertheless, the Turkish lira very much under pressure once again today. This is Bloomberg.
Our Turkey's central bank cut its key interest rate for a third consecutive month. That in itself was no surprise, but the move did push the lira to a new record low and frustrated investors who are saying monetary policy is becoming increasingly erratic. Damien Zasauer, Bloomberg Intelligence Chief Emerging Market Credit Strategist, joins us now. Okay, 100 basis point cut. Surprise or in line? In line, but I mean, look, the reality is what I'm not surprised about is the move in the lira. I mean, what's different this time, right? I mean, we've talked about this before. Erdogan tries to pursue his dovish policy. He then basically starts cutting rates. They have to dip into their FX reserves because the currency is depreciating too quickly, and then rate hikes begin anew. What's different this time, Alex, is the fact that their reserve base, their net FX reserves are negative 36 billion. And so the moves we're seeing here, these digital binary moves in the lira, are because the government can't step in and stop the bleeding. And, this has basically been the call for, a run on the lira that many have kind of been out there talking about for a long period of time. And so if you just look at where the lira is, the one thing I do want to correct a lot of people here today are talking about, down 32% year to date, down 3% overnight. They're looking at the movement in spot FX. But what real institutions do, if they have the risk tolerance to invest in Turkey,
is they're investing in non-deliverable forwards, or they're investing in local, in a way where they can extract that interest rate return. So that negative 32% year-to-date return in spot is only negative 16%, when you take into account the fact that there's an interest rate return there in the front end of the curve.
Are we about to come to the end of the cutting cycle? There was a kind of hint about that within the statement.
That's a great question. I mean, it depends on, just how far we go in the lira, I think, Guy, before Erdogan really sees the error of his ways. I mean, again, what's really scary here is that he's, he cited the Quran in his most recent statement. This is about usury, this is about Sharia law and his beliefs therein. And, when you have that kind of, firm religious belief that, high interest rates are bad, it may be very, very difficult to get you to move the other way. And I guess at what point, I mean, Guy, to your question, at what point is it $12, $13, $14 lira? At what point, do you really kind of step back and say, wow, this is just not working?
Quickly want to switch to South Africa for a second. So the central bank actually hikes and the rand goes down. What's up with that?
Because basically they're behind the curve. They're not hiking enough. They definitely have problems domestically, power shortages and the like. I mean, their economy is hurting. And so any hike is really going to, it's going to basically take away from their growth trajectory. But, a 25 bip hike to 3.25%, not what the market was really hoping for. And certainly the split decision really has something to do with that. And now dollar rand, highest of the year or lowest of the year in dollar terms, right? And so yeah, we're going to probably need to see more hikes coming through in South Africa for the markets to come to terms with the fact that, hey, this is an inflationary environment and it's not going away anytime soon.
Damien, we're going to watch this very carefully. We're going to continue to see exactly what happens in Turkey, South Africa, and the bigger picture, what happens with the dollar. Damien Sasser of Bloomberg Intelligence, thank you very much indeed. One of my favorite subjects, tea. We need to talk about tea now.
Your favorite subject's the weather, and then it's tea.
Okay, well, the two things go hand in hand. When the weather is bad, you drink tea. When the weather is good, you drink tea. Anyway, we are seeing a changing of the guard in the tea business. Unilever looks like it's going to be exiting. We're talking about brands like Brook Bond here. I know you guys like Lipton over there. I have my question marks around Lipton tea, but...
Yeah, you should. It's gross.
I wouldn't quite go that far, but we can fix this. I'm going to bring you guys some nice tea. But anyway, it looks like CVC is going to step in, 4.5 billion. These food companies are trying to basically move up the value chain. Unilever's no exception. They're able to pass prices on. They're looking for that margin story, so they're going up the value chain, offloading some of their older businesses. Tea's been around for a while. They make some good stuff, some of it not so good, but anyway, on balance, not bad.
Okay, well, bring us the tea. We're waiting. We're waiting.
I'll bring you tea. We've talked about naked wines already. We've got to talk about tea. Okay, what have we got coming up? We're going to talk about steel next. ThyssenKrupp gearing up for its most difficult sale yet, the disposal of its heart and soul steel business. We're going to discuss that with Alan Spence of Jefferies. The numbers today, pretty good. Stocks rising. This is Bloomberg. So we're wrapping up the trading session here in Europe. We've definitely been fading into the close. In fact, we've been fading for most of the day. But as I keep pointing out, we are still very close to record highs here in Europe. FTSE 100's down by around 0.5% today. Actually, the market's on the continent a little better, down by 0.2%. We are seeing some of the banks. We are seeing some of the oil stock. We are seeing some of the mining stocks coming under pressure. That's weighing on London a little bit as well today. Plus, you've got the FX factor in the mix once again. Let's talk about the session. What kind of a day has it been? Remember, Stock 600, we've been north of 490. We're now trading 487. We're off by around 2 points today, down by around 0.5%. You can see the gradual kind of move lower that has been taking place throughout the day. On okay volume, not great volume. Then we got that dip lower that was largely driven out of the United States, some suggesting it may have been down to a tweet that we got from Joe Manchin talking about the fact that he's still not convinced about the whole story around Build Back Better, the phase 2 of the Biden spending plan. So that kind of knocked things off a little bit. We're off the floor, but we're still down, as I say, by around 0.5% on the Stock 600. So we're kind of moving away from our highs. Where have we seen the gains? Where have we seen the losses? Real estate is where we've seen the gains, up by around 0.5% today. But as I've already indicated, energy, miners, banks, that's where the heavyweight hits have come through. Plus, you've got some healthcare stocks down as well. These are big heavyweight sectors that are definitely dragging on the market today. Individual names, though, continue to be where I think actually the interest really lies. This increasingly feels like a stock picker's market. It's about bottom up rather than top down. And I think you can certainly see evidence of that clearly today. Hermès, the French luxury stock, up by another 3.25%. This stock has been on a tear. In fact, it's been on so much of a tear that JP Morgan's suggesting today that it could be included in the Euro Stoxx 50. ThyssenKrupp, the steel giant, the engineering giant out of Germany. Such a torrid time of things recently, but the numbers are starting to turn around. The review, the sort of change in strategy that was implemented a couple of years back, starting to deliver the goods. We'll talk about that in just a moment. There's still, I think, a significant discount to the breakup value. And then one of my favorite stories of the day, Naked Wines down by 10% today. This was a darling of the lockdown phase of the pandemic. Everybody was drinking at home. They were buying their wine in bulk. That was the narrative. But now we're starting to see a shift. We're going from drinking at home to drinking in bars, which sounds like a good thing to me. It's either one or the other, but at least people are now maybe getting out and about. Be interesting to see whether that's maintained, Alex, if the COVID story continues to develop here in Europe.
I mean, I have a kid, so I'm still drinking from home. I don't know these people who go out and drink at bars. That's kind of crazy. Let's stay with the spirit of drinks for a second. So Bloomberg spoke to Moet Hennessy, CEO of the New Economy Forum, on the company's price and demand.
We have raised prices, but not because of supply chain issues. We raise every year our prices as to, we are selling limited products.
Now, I, for one, Guy, my palate got a bit more refined during the pandemic, so I am willing to pay up for more stuff and better quality. And I wonder if that's maybe a little bit of the distinction, potentially.
Does that, so you're moving from Prosecco to champagne? Is that what's happening? Because I'm sure Hennessy would be very happy to hear that. Moet Hennessy would be happy to hear that. No. I'm not sure that's entirely true, though.
No. I'm still the Prosecco person, but I do the mixers now. So, like, I can't have elderflower. It has to be Saint-Germain. That's like, $80 for a bottle this big. And let's be honest, that's not going to last me very long.
Okay. Well, I know the team's getting together this weekend, this Friday, so I hope that I'm going to get some good stories of Alex Steele's drinking prowess.
My mixing prowess. I'm very good. You'll just see.
Mixing.
You'll see.
All right.
You'll be on Zoom and you'll see.
Okay, we'll find out. Looking forward to it. Okay, let's talk about another stock that I just mentioned, ThyssenKrupp. The company had a huge strategy review a while back. We're starting to see some evidence that that's coming to the fore. We're definitely not there yet. We had the hydrogen story earlier on this week. Alan Spence, Jefferies European Metals and Mining Analyst, joining us now to give us his take on this. Let's just talk about the journey that we've been on with ThyssenKrupp. This was a company that people were worried wouldn't survive. It has survived. It's starting to make progress. It's starting to see some good evidence that the plan is working. Where do you think we are, Alan, in the journey that Thyssen is on?
Apologies, I'm having technical issues. I can't hear or see.
Well, that probably is a sort of prerequisite for getting television done. So we'll come back. We'll figure it out. It's going really well in this show today. So we'll make sure that we nail that one down. This is a company, and there are so many industrial companies like this that have been through the review that are starting to see some evidence of the benefits of it, Alex. But nevertheless, still trades at a significant discount to the breakup story. We were talking about what was happening with GE only a few days back. There are plenty of big conglomerates that still may be in breakup mode, and Thyssen is definitely one of them. And
I think the point of the IPO is that, and we were talking about this earlier too, is it a bit early for it? I mean, the hydrogen is a super green, no pun intended, industry at this point, and it's going to need a lot of capital behind it. So to spin off now versus when it's more developed was also an interesting choice.
It's going to need a lot of green. Maybe that's what we should be talking about in terms of the investment. Yeah, I think they are going to hold on to a significant chunk of it, but it's the pictures, it's the kind of stuff that we're looking at on the screens right now that I think where the real challenge is going to lie. What do you do with the steel business? What do you do? How do you green that? How do you make green steel? And I think that's where the challenge is really going to lie. They've also got a huge automation business. They've got other parts of the business that are dependent on the chip shortage as well. So there's some real challenges coming here. So yes, things are improving. Is there still a long way to go? Well, that certainly seems to be the case right now. European stocks have settled. Let's take a look at what the final numbers ultimately look like here. This is the picture. As we've indicated, it has been a down day for Europe, dipping by around 0.5% for the stock 600. But the banks, the miners, and some of the energy stocks coming off, the steel stocks certainly, Alex, coming a little lower.
Yeah, all metals really getting hit today, iron ore as well. Okay, so Sweet Green is now indicated to open between 32 and 34. It priced at 28. It's going to list on the NYSE. This is the first indication of what we're getting. So a little bit of a pop there as the company seeks to raise some money to really expand pretty much everywhere. Yeah, we'll track that for you if we get any more closure on that price, indicated to open 32 to 34. This is Bloomberg.
This is Bloomberg Markets, the European close. I'm Ritika Gupta, and you're looking at a live shot of the principal room. Coming up, Tsunabe, the Coty CEO. That's at 1:30 p.m. in New York, 6:30 p.m. in London. This is Bloomberg. Let's check in on the Bloomberg First Word News. I'm Ritika Gupta. The leaders of the US, Canada and Mexico will hold their first in-person meeting since President Biden's election. The three will meet at the White House today. Amongst the issues likely to be discussed, energy, borders and auto manufacturing. Trade disputes remain despite the rewrite of the North American Free Trade Agreement. European countries are making a U-turn in their fight against a fourth wave of the pandemic. They're increasingly forcing countries to let employees work from home. In Belgium, the government said that employees need to work from home 4 days a week until mid-December. Germany is poised to agree on mandatory remote working as long as there are no operational issues. And the risk of a trade war between the European Union and the UK may be receding. The bloc is suggesting that its forceful negotiating stance led to a softening in London's position. European Commission's officials told ambassadors that the UK's threat of ditching parts of the agreement related to Northern Ireland may be off the table for now. Still, the UK pushed back against the idea that anything has changed. And Goldman Sachs is ramping up operations in London to target the world's super rich. The firm has hired at least 9 private wealth advisors in the city this year from its rivals. Goldman is boosting its wealth management and consumer banking unit as part of a new strategy. The goal is to make the firm less reliant on trading revenues. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Alex.
All right, thanks so much, Ritika. Just to update you, Sweet Green now indicated to open at 38 to 40. It priced at 28. It was an upsized IPO. Should point out, though, that 71% of its IPO peers fell on day one. So it would be a relative outlier if it still continued with this pop, but looks to indicate on the high end to about $40 a share. All right, let's stay with banks for a second. Bloomberg spoke exclusively to Noel Quinn, HSBC CEO, at the Bloomberg New Economy Forum, and he talked about the world cannot truly decouple ever from China.
The world's economy is recovering. It's recovering well. There are tensions in the supply chain. We shouldn't be too surprised by that. We went into fast reverse. We're now going fast forward. There will be friction in the supply chain for a period of time. But take it as a positive that the world is recovering and economies are rebounding. If I then look at the concerns for the future, I am concerned about inflation, because I think at the same time as the supply chain recovering, there are some new issues. Supply chains are repositioning, partly because of geopolitics, partly because of resilience considerations by governments. Oil prices are going to remain high for quite a while because there's constrained supply. And the investment cost of new sustainable infrastructure is going to have a premium in the near term.
But do you worry about shocks, or do you worry about monetary mishap? What does it mean for a big bank?
I think controlling inflation is going to be a fine art as opposed to a science. Okay. And I think we're going to have to make careful judgment calls in the central banks over the next few weeks and months as to how they keep the balance between economic recovery and making sure inflation doesn't get out of control. And I think they'll do that through pulling back on QE and progressive, gradual increases in interest rates. And I think countries will move at different times on that, and that's okay. But it's going to be about balance.
We just heard from the former Treasury Secretary, Hank Paulson, also saying it's almost impossible for the U.S. and China to decouple. Yeah. Like, how do you read the Chinese economy right now? And has HSBC rebuilt ties with them?
Well, listen, the Chinese economy has been big as a manufacturer of the world for many decades. It's also huge as a consumption market for the future. And I don't think the world can decouple from one of the biggest manufacturing nations of the world and what will be one of the biggest consumption markets in the world. So I really hope it doesn't decouple. Will there be differences? You know, differences in views on technology, differences in views on politics, yes. But I think it's important that there is a level of connectivity between the world and Asia and between the US and China.
In general, for your wealth business, do you see, how many bumps along the road do you see? Do you see like a clean trajectory upwards in terms of how you build and
For
grow?
us, it's continuous investment. We already start with a very strong platform in Hong Kong. We're one of the biggest wealth managers in Hong Kong. We have on our balance sheet over 1.6 trillion of assets under management, wealth assets under management for our clients, whether it's in private banking asset management, it's in our retail operations. Now, for me, it's about a continuous investment program. I guided the market that we were going to spend $6 billion over the next 3 to 5 years. $3.5 billion of that is building out our wealth business within Asia, and we're going to do that across all of Asia. I think there's wealth opportunities in Hong Kong still. China, definitely. Singapore, absolutely. And also India. Now, that will be a combination of organic investment, recruiting people. And as you've seen in Singapore, we bought a business, or are in the process of buying a business from AXA. Bring that business together with our insurance business, and we have a much more powerful wealth proposition here in Singapore. And I'm looking at 3 or 4 other opportunities like that as bolt-on acquisitions over the next few months across Asia.
Noel, have you spoken to Hong Kong authorities so that you don't have to do a quarantine next time you come back, as they rolled out the red carpet for...
I'm not planning a trip at the moment. I think it's important for Hong Kong to establish what they need to establish with China on reopening the Hong Kong-China border. I don't want to do anything that may jeopardize that. I would love to get back to Hong Kong as soon as I can, and when the authorities feel it's right for me to go back, I will do.
Yep, the authorities are definitely in charge of that process in Asia. It's interesting how it's developing. HSBC Group CEO Noel Quinn speaking exclusively, of course, to Bloomberg's Francine Lacroix from the Bloomberg New Economy Forum. Alex, the story in China feels like a very different one at the moment. Noel Quinn, I always feel like he chooses his words incredibly carefully, trying to manage this process of effectively being a Western bank operating in China, mainland China, in Hong Kong. Incredibly difficult. He hopes he doesn't see decoupling. I wonder if we were to see it, where that would leave HSBC.
Yeah, and many other companies as well that's trying to do something relatively similar. I also find that we have not spent a lot of time talking about China and what's happening there with COVID and the zero-tolerance policy. Why don't we think that's going to have implications for ports and for goods again? And that's when we talk about inflation and supply chain issues. If China continues down this route of the zero-tolerance, I don't know how the supply chain issue gets resolved quickly, like some are predicting.
Well, it does get resolved, but the operative word there in your sentence was quickly. And this feels like this is going to last for a very long time. You listen to the car guys, they're certainly talking about it lasting for a long time. The port congestion looks like it's going to be lasting for a while. The only thing I would say is that maybe post the holidays, some of this eases. Maybe this kind of huge push, this consumption push into the holidays starts to fade a little bit, and maybe that allows things to balance out a little bit more.
Well, yes, true. And we are seeing freight rates come over a little bit. Some port time, congestion time is easing a little bit as well. Hey, Guy, there's a headline just crossing from the Hill, and it's about Powell and Manchin. So Senator Manchin apparently says looking very favorably at Powell after a chat. Tom Porcelli of RBC had a really interesting note out yesterday, and he was saying how he thinks that Lyle Brainerd is President Biden's pick, but that having them both come to the White House was sort of how they were going to introduce that idea to the market and politicians, see how it played, and then now they're kind of taking the temperature of what a Lyle Brainerd versus a Jay Powell would be. But that Brainerd's the preferred pick, but that Powell might be the one to take it. Manchin says he's looking favorably at Powell now after the chat.
Well, that's interesting, considering where he lies on the political spectrum. Obviously, Powell, a registered Republican, that's going to cause issues maybe at the other end of the party were we to go down that route. There's also this kind of whole argument floating around that Brainard potentially could be a Treasury Secretary candidate. She's obviously got a lot of pedigree at Treasury, and she knows a lot about it, so that would be a fit as well. So maybe there are other kind of elements in terms of the chessboard that need to be thought about here. But we await the news from the president. We're all agog with anticipation. This is Bloomberg. We're off the lows. Equities starting to gain a little bit of traction on the upside. Let's figure out what's going on. QUINN Gupta has the details.
Well, Guy, it's all about those retail earnings, and it's actually starting to spill over into even some of the companies that haven't even reported. Gap, for example, leading the charge up 6%. This coming after foot traffic doubled from the same time last year. Nordstrom as well, announcing a partnership with a sports franchise company called Fanatics. Petco, the obvious, the clear, really loser right now in this kind of broader theme of retail's beating the earnings, missing their third quarter margin as well as their fourth quarter guidance forecast. You have Amazon, MasterCard, Visa. I want to follow up on the story from yesterday where Amazon's talking about co-branding with MasterCard instead of Visa, really talking about the power some of these retailers are having against credit card companies. Let's wrap it up here with Deere, which is a really big story, of course, finally hitting that deal with its union workers. And you can see coming up, and finally, its biggest day gain since November 1st, which was the last time you thought that they were hitting a deal. This time, let's see if the momentum sustains.
All right, Kriti, thanks so much. Love the update. Bloomberg's QUINN Gupta joining us there. Well, West Virginia Senator Joe Manchin now saying he hasn't made up his mind on Fed Chair Jay Powell or Lyle Brainard, but that he did look favorably at Powell after a chat. This comes from the Hill report. Anne-Marie Hordern, Bloomberg Washington correspondent, is at the White House. Hey, Anne-Marie, is this normal, like Manchin talking to Powell, etc.?
Well, it is normal that the Fed chair or a governor would go over to Congress and meet with senators and lawmakers. What's so interesting about this Manchin-Powell meeting is that on August 5th, Senator Manchin sent a letter to Chair Powell saying that we shouldn't overprescribe the patient being the U.S. economy coming out of a once-in-a-lifetime pandemic that needed incredible help of monetary support. And now he is saying, and he has in the past said that he thought inflation was going to be a problem. He wanted to make sure the Fed was pulling back on treasuries. And now he's saying he looks favorably on Powell. So he's really done a 180 when it comes to how he thinks about Fed Chair Jay Powell. And potentially this could be a key vote for the president as he's making his decision on who he's going to put in the top spot.
Yep, we're looking for news. We wait it with a great deal of anticipation. Anne-Marie, we've got a NAFTA chat coming up a little bit later. I know we're not allowed to call that anymore. What's going to come out of it?
The old NAFTA. Well, we're not going to get a joint press conference. So it does seem like the tone is going to be a little bit more friendly than the prior administration. Remember, the last time these three countries met was in 2016 when President Obama was in the when President Trump was in the White House, in Ottawa. Now, what we do know is going to be top of the agenda is going to be energy and car manufacturing. Now, already President Trudeau was at Congress, and he said that what he thinks in the president's Build Back Better agenda when it comes to car manufacturing and EV tax credits is unfair. And he says that goes against their current trade agreement. So that'll be one thing, as well as, of course, energy. President Biden has killed Keystone Pipeline. Trudeau had backed that. And now there's a lot of talk on what's going to come next when it comes to the Line 5 pipeline that goes to Michigan. So energy and cars will be top of the agenda for what everyone calls the Three Amigos.
Three Amigos. Yeah, we had that propane chat a little bit earlier on. Anne-Marie, yeah.
Okay, first of all, the Three Amigos movie is one of the best movies of all time. Let's just be very clear on that. Steve Martin, Martin Short, Chevy Chase. Just let's get that out there. If you haven't seen it,
can I just say that I want to be Chevy Chase? I know that I'm going to have to fight Matt Miller to be Chevy Chase, but nevertheless, if I was going to be one of those characters, that's who I would want to be.
If you haven't seen it,
Anne-Marie, I'll let Anne-Marie pick later, online, offline, who she's going to be. Anne-Marie Hordern, thank you very much indeed.
She hasn't seen it. Please, you can look at her. She has not seen it.
Yeah, she has no idea, does she?
No.
Age is not always a blessing.
No.
Anyway, let's move on.
Guy.
I know. I'm sorry. Inevitable. Let's talk about the next 24 hours. What's coming up? Bloomberg New Economy Forum continues. We're going to continue to monitor some of the great conversations that are coming out of that. After the bell, this is what I'm looking forward to, Alex. AMAT, going to really be fascinated to hear what's the latest out of the chip sector.
Yep, and tomorrow, UK retail sales. They were awesome here. Let's see what happens over in your neck of the woods. Plus, Fed heads Richard Clarett and Mary Daly, they're all going to speak at the Asia Economic Policy Conference. We'll look forward to that as well. Plus, Foot Locker. There's still a Foot Locker. That's going to report here in the U.S. That wraps it up for me and Guy here in New York and in London. Coming up, New York Congressman Gregory Meeks will be joining Balance of Power on Bloomberg Television and radio. And Guy and I are headed to radio as well, DAB Digital Radio, the cable. This is Bloomberg.